So FHA just approved 40-year mortgage for loan modification and purchases, and the commercial buildings in the country that are like Class A type of commercial buildings are selling at a loss. Welcome back to Tuesday Real Estate Update. My name is Shawn. So FHA just approved 40-year loan to help the buyers and sustain the real estate market. So if you look at the paper, the monthly payment will be lower for the buyers and loan holders. However, in the long run, you end up paying more. So there's no free lunch. The banks are going to make more money on the interest payments for 40 years, basically 10 more years. However, the buyers can have a little bit of the monthly payment relief because it's going to go down a little bit on monthly payment. So in order to benefit for the buyers, I would suggest, I think having 40-year mortgage is good. However, pay like 30-year mortgage or even pay like 20-year mortgage. What I mean by that is you just pay a little bit extra every month towards the principal. So it's kind of like, you're shortening that loan length, and yet you have the option to pay less. If you have a tight cash flow month, you can pay the 40-year mortgage payment. However, you can keep paying more toward like 20, 30 years. So it's you're putting more toward the principal. I think that might be the better strategy, and it's going to help out. And I think the buyers in the short run, but in the long run, you're going to pay more as a buyer. And it may sustain the real estate market a little bit more because more people can afford to buy, which then drives up the demand. So again, the housing market crash isn't something that I see right now. So the commercial side of it, many office buildings in downtown all over the country, they're selling at losses. For example, just happened, Louisville, Kentucky, office building, the Class A that was sold for $35 million in 2001, just sold for $9 million. That's a lot of loss. And there were other examples in Santa Ana in California, one of the Class A building that BlackRock just sold at about 35% loss. And companies like BlackRock, they probably have really good data. However, the office vacancy after the pandemic, for the last 3 years, the office vacancy rate has been going up really high. And I would assume that is going to continue because not many companies are still having the employees back to office. A lot of the workers are working at home. So I see one thing that even in the Portland market, I think that's what's been happening. The Portland downtown has been suffering quite a bit. And the investment companies and like mutual fund and REITs and things like that invested in commercial real estate heavily, they're going to be impacted pretty significantly. So that's coming down the road, in my opinion. And so it's kind of like interesting time. In the commercial side is going to get hit much harder this round. The residential side is still holding pretty strong. I haven't seen like this before, but that's what's happening in real estate. Thanks so much for watching the Tuesday Real Estate Update, and thanks for considering hitting the like button, subscribe, and bell notification. And I hope you guys have a great week, and I'll see you next time.